Good morning, everybody. It's the 13th of March. We're Signal Centre, starting off a brand new week. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, pretty good, mate. Could be a pretty volatile week, I think,
Yeah,
after all the episodes of towards the end of the last week with
yeah,
Silicon Bank.
indeed. There's a fair few bits to get through on the headlines. And that's obviously created a fair amount of volatility in the markets, which may be good for some, may be bad for others. But we'll go through all the latest headlines now, just try and wrap it all up for you, then get stuck into the charts and have a look at how markets have been moving. As always, if anybody's got any requests, if there's markets you're looking at, if there's been a big move in the market that you've been following, and you need a fresh opinion or a fresh pair of eyes to take a look at that, please feel free to post it up and we will do our best to cover it. Okay, so let's get to the headlines because, as I said, there's a fair few to get through. So starting off with Friday, we had the non-farm payroll number. That came in stronger. The number increased to 311,000 for February compared with a consensus forecast of around 200,000. So it was a massive beat above the estimates. There was only a small downward revision for January to 504,000 from the original reading of 517,000. According to the latest household survey, the unemployment rate increased to 3.6% from 3.4% and above the expectations of 3.4%, with an increase in employment held to 144,000 amid a slight increase in the participation rate. As Steve mentioned, the Silicon Valley bank collapse has dominated headlines over the weekend. And remains a key element within markets. And the collapse has increased fears over contagion in the financial sector and triggered a sharp decline in risk appetite with heavy losses in equities, especially given the high value of uninsured deposits. The Fed and Treasury have ridden to the rescue. Over the weekend, the US Treasury and the Federal Reserve announced that all deposits at the Silicon Valley Bank would be protected. The move triggered a strong rebound in risk appetite with a decent recovery in equities. The Silicon Valley Bank UK has also been saved. At Monday's European Open, the government announced that it would be sold to HSBC, which eased the UK contagion risks. As a result of all of this over the weekend, there has been a big shift in Fed expectations. Given the increased fears over the financial sector, there were fresh doubts that the Federal Reserve would be able to raise interest rates more aggressively. The chances of a 50 basis point hike this month were now cut to just below 30% on Friday and were then priced out completely on Monday. The US two-year Treasury yields also collapsed to below 4.4% from 5% last week. The dollar's also seen a big dip to the downside. The slide in bond yields, shift in Fed expectations, and the rebound in risk appetite triggered a sharp dollar sell-off, and the index dipped to just over 2-week lows on Monday. We did see Canadian jobs as well on Friday. The employment increased to 21,800 for February after 150,000 increase the previous month and well above expectations again of 10,000. We do have a Fed meeting today. There'll be a behind closed door meeting to discuss the banking situation. And then we focus on the rest of the data that we've got this week, kicking off with the CPI number in the US, which will be printed and released tomorrow. The data will obviously be very important for underlying expectations surrounding Federal Reserve policy. So a real big shift in markets over the last couple of days or so. So let's break that down and have a look at the charts and see what's happening there. Steve's going to kick off with cryptocurrencies, and that again has been another asset that's been very much on the move after looking pretty scary last week. It's been a pretty substantial bounce back.
Yeah, I don't know about you, Joe, but it all feels like a little bit of everything feels a bit dodgy now. Really dodgy. I can't sort of like, the Fed and the Treasury ride to the rescue. I mean, what they've just printed a load more money to sort of
Just
like
underpinned the deposits, basically.
yeah, but there's still a price to pay for that, surely. That's sort of like that banking collapse. I know you can sort of like uh, dish it out, but their whole sort of like business proposition that they had was like so flawed, and who's going to sort of like pay for that? I mean, they were just basically taking, I think, long-term US Treasury bonds and not contemplating the fact that interest rates may go up. I think it's just, I mean, Silicon Valley Bank, never heard of them until the last week.
No, same
Have
here.
you? Oh,
No.
it's just like incredible, and the amount of money that has to be sort of like fed into it. But obviously, there's an argument really that interest rates should go up higher now, because there's basically a new lending program that's been brought in. So it's sort of like potentially this is just a sort of like a sticky plaster on a real big problem.
Yeah, well, that's the way that these things have been dealt with for many years now, isn't it? Going back to the 2008, 2009 banking crisis. Just
yeah.
yeah,
I
throw
know.
money at it.
Yeah. Let me just get the door quickly. I'll just and then jump in the market.
Oh, he's left us.
I'm back, mate. I'm back. Don't worry.
Okay, good.
Yeah, I wasn't just dropping the mic and leaving the room. But, yeah, felt like that sort of moment. Let me just share my screen and let's dive into the analysis. We'll have plenty more opportunity to speak about this as the week goes on. I'm sure we're going to see some real humdingers of the moves. And I think it's definitely something to worry about, but the markets don't seem to be too concerned at the moment. They've obviously had a sell-off last week. Let's take a look at the weekly chart in Bitcoin and really drill down into what's happened over the last week. We had the move lower. Sorry, I've got like an audience of dogs barking in the background. Stop it. And we hit the support and bounce from there, and that's a nice bullish hammer candle on the weekly chart, off to a good start today, trading around 22,500. From a daily chart perspective, we had the impulsive move higher that we know stalled at resistance at 25,400, and then the sell-off lower, and it looks like we've completed that A leg on the way up to forming a B leg, which is a correction in the downward trend before the extension lower that we expect as a C leg extension lower. So levels to watch really in terms of 22,668 at the moment. We're trading around there. It's not a bad place for sort of like sellers to come in. We can see that sort of like we've had a reaction from here before. Above here, we should get resistance around about the 24,000 area. Before 25,400 is a much larger resistance level. Yeah, so nice bounce higher, but I think it's like a dead cat bounce. I don't expect this to continue for much longer. Ethereum's had a similar sort of move. We've got this morning star formation, which we saw prices move higher. Resistance coming in at 1677 before 1730. That's the major one, as we all know. Going back historically, that's always been a level, pivotal area, and has acted as really good resistance. And are we forming? Is this the start of? I mean, we thought we might be posting a double top. That markets reacted higher. Is this some sort of head and shoulders formation potentially? XRP tried really hard to get through the resistance that basically started from the spike high from the 23rd of September last year. We've had these lower highs, and we formed this sort of triangle type resistance. And yeah, we broke above it last week, failed, and came back below that downward trending resistance line. The cloud also assisting with that. And yeah, looks like we've got support down at 35.46. We did break below there yesterday, but then the reaction higher when everyone seems to feel like all the worries have gone. Not really the case, I don't think. This has obviously lent a supportive hand to gold. Always a bit of a safe haven asset when it comes to times of external struggle, or where we need to sort of like where the money flows when people are a little bit concerned. So we've had a rally in indices over the weekend, and also cryptos, but also gold. It sort of like doesn't make sense if there's that reaction higher because of the I mean, we've seen the dollar move lower, so we are reacting higher on the back of that, but it feels like a bit of a safe haven move. Gold moving higher. It stalled at 1895, just below the 1900 to 1905 resistance, and reversed sharply lower. So maybe we've had it. It's sort of like had the little bounce, and now it's time to sort of like resume the downtrend. It's a difficult one to sort of call at the moment. We'll have a little bit of a look at the shorter term price action while I'm planning for the gun to head trade idea. So support coming in today. We'll have support around 1867. and resistance, as I say, around 1900 to 1905. Silver, similar sort of price action, bit of a bounce, not quite as aggressive as gold. That's trading up at $20.80, support down at 19.95, and resistance at 21.40. Crude oil, that's spiked higher on that was a bullish engulfing candle actually on Friday, and we've had a continuation higher, but this remains overall under pressure in the downward trend, although we are posting these higher lows. So a little bit of potential support coming in this bottoming formation on crude oil. Resistance really around 80.72, then 82.61 on the WTI crude oil. Support coming in at this upward trending support line, 74.30. Then we got 72.58 before 70.21, the major support comes in. Same sort of price action in Brent crude oil. Brent crude oil trading at a premium, $5.70 premium to WTI crude oil. That's had a nice bullish engulfing candle as well on Friday, and price action slightly higher. Support coming in at 80.31, resistance at 86.70. And natural gas still under pressure, still doesn't look great. 210 is the support level, 305 the resistance level. Yeah, let's take a look at the indices before we dive into let's take a look at FX before we dive into indices and see if you can give us some direction, Joe.
Yeah, okay, cool. Let's take a look at FX then. So dollar index to start with, and as mentioned, been a big decline in this because there's been an increase in risk appetite. So the dollar was trending higher in the short term following the break of this short-term downtrend, looks set to go and hit that 38.2% fib level at 106.15, but come up shy of it and has posted 3 consecutive down candles. Obviously today isn't finished yet, but it's a big meaty red candle so far. We do have some local support at 103.62, which we've just come up just shy of. So maybe that'll do a job, maybe support the dollar in the short term, and maybe provide an opportunity for buying it in the short term. But clearly the overall trend remains bearish, as we can see here. And if we take a look at the other currencies linked to the US dollar, we can see some quite interesting patterns starting to emerge. So euro US dollar, big gap to the upside on Sunday night. So looking for that potentially to be filled. Our analysts are looking to buy a dip to the gap this morning. So that's looking pretty strong indeed. If it can hold on to these gains, then it may be that we continue to move higher towards 108.83. So looking pretty strong and pretty robust as a result of what we've seen over the weekend. If we take a look at cable, it's a similar situation, up by 0.73% as things stand. So this looked to have completed a double top last week on that big red candle there on Tuesday, the breakdown. But then prices have come storming back with 4 consecutive upward sessions and a big gap higher again overnight on this. So potential for a pullback to fill the gap. But seeing that we've got a short-term break of trend here, potentially a bit of a wedge formation, looks to be pretty strong at the minute and may continue to move higher, maybe towards 123.00 in the short term. Taking a look at Aussie versus the US dollar, that's up 1.5%, potentially forming some sort of wedge here. The pullback in price came up just shy of a 61.8% fib level, which is also the neckline of this head and shoulders bottom pattern that completed back in November last year. So if we see a breakout of this wedge or this triangle pattern, that may indicate further upside in the short term as this continues to move higher. So keeping a close watch on that. Similar situation with New Zealand dollar, although in this instance we actually are breaking out of the wedge as we speak. The 38.2% fib level did a okayish job. We did overshoot that a bit and also complete a double top here as well. I've actually removed the neckline of this because it was just looking all a little bit messy. So the breakdown there on the 24th of February indicated that we may have completed a double top and then we'll be start looking for lower prices. But we just chopped around here and now trying to break out through a wedge and potentially signifying further upside in the short term. So an indication again that there is an appetite for risk out there. Let's take a look at dollar yen. We can see that stalled into a 38.2% fib level. So the weakness in the US dollar has seen that pull a bit lower. Bit undecided today, posting a bit of a doji as things stand. There was potential for a bit of a bottom to form here. Now I'm a little bit undecided about really where this is going to head. But I guess, again, we could maybe make out some sort of short-term wedge here that is indicating that we're going to see maybe a pullback in price in the very short term. So pretty choppy stuff on that as it stands. Dollar CAD, these two kind of cancelling each other out a little bit. We had the Canadian jobs data as well on Friday. We've seen this rally pretty substantially into this area here that had been previously highlighted on the chart between 138.37 to 138.55. Posted a doji candle on Friday and moving sharply lower today. So people and traders favouring owning Canadian dollar over the US dollar at the moment. We do have what was previously resistance, now potentially acting as support between 136.82 to 137.00. So it'd be interesting to see if we get any kind of reaction around that level there. And if we take a look at dollar Swiss, just to kind of round up the majors, we can see that that looks as though it's breaking out of a channel. Back here in February, we then saw prices push a bit higher, but stall around 94.40. The pullback to that newly formed support did a decent job initially, but then on Friday collapsed straight through that and now back towards support down here around 91.36, which is also a 78.6% pullback of this short-term up move. So pretty choppy stuff. Looks as though really that the dollar is on the back foot, and we're seeing other currencies benefit as a result of that. So a couple of requests coming in. I'm going to take a look at Aussie Swiss and also going to take a look at Euro CAD. So Aussie Swiss, big breakdown here. So really not that surprising given that we've seen this big downtrend that's been in place. We saw a decent rally to the upside, stalled into a 61.8% fib level and also that downtrend. Then prices moved sharply lower. And on Thursday, we saw a breakdown through this previous swing low that we last saw in December. And then we've backed that up on Friday with further selling. So that's looking pretty ugly. We are attempting to bounce back today up by 0.78% as things stand. So now we would be expecting that previous support to now turn into resistance, and that comes in at around 61.58. So we could see a bit of a bounce into that level, potentially a bit of an overshoot into this level here, which is at 61.89. But given that the overall trend remains bearish, I think it would be a case of looking to sell into rallies with Aussie Swiss, expecting potentially lower prices in line with the dominant trend. Let's take a look at Euro CAD now. So this was stalling into this major resistance that we last posted back in February. And as we can see here, there's a couple of occasions where prices rallied into that level and ultimately failed and looked to be potentially forming some sort of top. We had a left shoulder, a head, and then potentially was in the process of forming a right shoulder. That's now invalidated and off the table because we've now broken out to new highs. And we did that on Friday on the back of the non-farm payroll number and the Canadian jobs number, smashed through that level at 146.34, and now potential for some higher prices here. Lots of white space for this to move into on the upside. And again, like we just looked at with Aussie Swiss, would now be expecting previous resistance to act as support. So a pullback to 146.35 potentially could provide opportunities to buy. So I think that's it on the currency requests. So I'll hand it back.
Aussie Swiss, did you cover
yeah,
Aussie Swiss? You did,
yeah.
Akram's asking about gold. I will cover it a little bit more when I dive into the gun to head trade idea. So just jumping back into indices now. Let's start with the FTSE and how last week was horrendous. You can see the sort of like correction lower. We've broken down through a number of weekly supports as well. However, Monday morning's price action has reversed sharply, but it's now starting to give up those gains. This 76.70 area is really key. So we're trading around 7700 at the moment, but just below here we've got support. But I wouldn't be surprised to see this support break as the morning session goes on. As we see, we've seen a bit of a reaction. Let's put the 38.2% fib on there as well, just to see where that is. That's down at 75.34, so 170 points lower. We have seen this reaction higher where people are thinking, yeah, it's not so bad. The Fed, the Treasury have come in and supported things, but there is a potential for contagion, and we have to sort of like realize that and really sort of consider that if this has happened to silicone, Valley Bank, then there's potential for other banks to also have similar issues, especially these new banks. You know, they're not like the reliable old banks of the past from 2008 who still probably have a lot of bad debt hidden amongst the sort of paperwork. This is before computers, obviously. So anyway, FTSE, that doesn't look great. The reaction higher is giving it up already. You can see on the daily chart we've turned around very sharply in the last hour. In fact, as we're speaking, as we've come on air, it started to give up those gains. That's quite a 50 point move in FTSE is a pretty decent move. You can see the hourly candles, and I wouldn't be surprised if we just take that out and resume the downtrend. Same sort of price action in the Germany 40. Let's take a look on the daily chart as well. Fifth and final wave complete, potentially. Looking for this ABC correction, or are we going to have a bit of a deeper correction first? Support coming in at 15,145. We're not far away from that, really, in the scale of things. Only a couple of 100 points. That's not a lot in Germany 40 standards. EU 50 has had the same sort of reaction, had the spike higher, reached Friday's high, but given up those gains already in the last hour. So support clearly marked here on the chart at 4171.5. Next support after that, down around about the 4100 mark. Let's take a look at Dow US 30 as well. We can see the price action from last week, very negative, broke through the support at 32,441. We managed to sort of like try and push our way back up there on Friday, but it failed, turned around, moved lower, back down to support we haven't seen since the 3rd of November last year. And then we reacted higher, closed, and the weekend move higher continued, but hasn't taken out Friday's high. So a bit negative there, and we're reversing sharply. The NAS 100 looks a little bit better. It's completely engulfed Friday's price action, and this automated Elliott wave indicator shows that this market believes it's in its fifth and final wave, or it's just finishing the fourth wave. Let's see about that. Resistance coming in at 12,450. And yeah, but real sort of short-term resistance 12,092, support 11,785. And simple sort of price action to the Nasdaq, S&P following suit, trying to engulf Friday's candle, Friday's body, trying to take out that opening level and the closing level from Thursday, 3,916, but struggling at the moment to do so. We can see again in the last hour we've had a bit of a pullback. So it's just really what the reaction is from this. For me, as I say, yeah, we could get some sort of rally for some bizarre reason, but I wouldn't believe in it. Yeah, just wanted to sort of just quickly cover off gold for people who missed it. This is the 4-hour chart. So we've got this, we talked about an inverse head and shoulders formation. Really has that broken down? I don't know. I mean, that was the formation there. Neckline was across here. We retested, but we went a lot deeper than we really should have done from and then this is now for me a potential double bottom. There's the neckline 1858, and we've extended higher already this morning. So yeah, it's looking well. Let's do the measured move target on this. Measured move target is 1911. Possibly. We definitely had a sort of like the spikes higher, but this could be the double bottom formation with a neckline, which was 1858. For me, that's the real support level to watch today. If we do manage to get down there, you'll probably see buyers coming in, stepping in front of that sort of like sell-off. However, if we do break it, I think it's back on the defensive, but maybe a good risk-reward opportunity to sort of buy into any dip we get today, maybe for that extension higher towards 1911.
Okay, thank you very much, Steve. Okay, so let's take a look at gun to the head trades then. So this is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, we just pick something that we like in the hope that we can turn a profit between now and 9 o'clock UK time when we close these ideas out. Obviously, each of the ideas must have stops and targets, also must have risk reward ratios better than 2 to 1. And we're also risking 1% of trading capital on each of these ideas on a live account. So Friday, we had a couple of trade ideas. Steve was buying gold. I was buying dollar Swiss. So they were actually at odds with each other. And obviously it was non-farm payroll day as well. So it was a difficult day to participate in such a challenge. But Steve actually hit target on gold. So well done to you, Steve. You banked a nice profit there. Sadly, I was stopped out on dollar Swiss. Obviously, it was unlikely that the two would both work together. These trade ideas are actually published up on our trading view profile at signal_census. You can check them out here. Obviously, everything's time-stamped and you can check out the progress. So this was Steve's gold idea. If we click the play button, we can see went straight to target pretty quickly and actually continued to move to the upside. So that was a nice win. And on the flip side of that, I was looking to buy dollar Swiss, which was trading at support on Friday. I was hoping that that would hold, but it didn't. It just flopped completely, as you can see. But that's why we have stop losses in place to prevent being caught in this, which just a big continuation to the downside. So we made money on Friday, Steve. Let's hope we can start this week off on the front foot as well. Is there anything that you're fancying? Gold again, maybe?
Yeah, gold again, maybe. Now, normally I'd sort of like think, okay, got to the top of that range, and this isn't a bad level to sort of like think about, fading into the rally if when in a sort of like non-trending market. However, this has been aggressive. I think there's more to play out in the story overall, and the fact that gold's gone up, dollars come off. Indices have sort of like rallied a bit. It's quite a conflicting picture that's been painted at the moment. So for me, are we sort of like going to sort of like have another go at this resistance level? I wouldn't be surprised. It's not a bad opportunity to get in as well, because if it does fail, if we do get a break back down below maybe the 1865 level, then that should give up the gains. But there is still potential for break higher. Maybe we're going to challenge that. Maybe we're going to sort of like play out on this double bottom formation, which has a target somewhere up here. And this is like a decent opportunity. It's about a 3 to 1 risk reward. So let me just log in to right. Everyone cover your eyes. Everyone cover your eyes, because we're signing in. Here we go. We don't want everyone else signing in making money on our account. So this gives us an idea. Yeah, this gives us an idea where we are. We started with £2,000 at the start of the year. It's 1835, so we're down, and but we managed to sort of like make a little bit of profit on Friday and move higher. I mean, it only takes a couple of trades for us to sort of like really get back in the game, and then we're hoping to push higher. And to prove that sort of like the technical analysis that we do, it shouldn't really work, because we're gun to head trade idea. We're just doing something that we may not really want to do, but we're going with it anyway. We're seeing how it works theoretically. We're trying to see if it works in a live environment. So 1% we want to do. The stop on the trade, risking £18.60. If we do naught there, 1%, £18.19. That's a little bit under what we we normally look to risk, but that's not so bad. 1913 I'm going to target. And the stop, that doesn't look right at all, Joe. What am I doing wrong here? The price is 1913. That's right. We're buying at market 1878, 2400. That doesn't look right at all. Let's try and work this out. I don't know what I'm doing wrong here, Joe. It doesn't look right at all. Stop. Where's your stop, baby? 1865. That's a bit better. That's better. Let's give it a 2.4 to 1 risk reward on this. Can I tighten that stop up a little bit? Yeah, let's tighten that up. 1868. There we go. We're in 18, but getting long at market. Stop is at 1868, and the target in 1913. That's what we're going for today.
Okay, superb. Good luck. I'm going to take a look at some of the sterling markets, I think, just because there's been some pretty decent moves. So I was looking at sterling CAD. I mean, this is broken out on the daily here, but it has stalled against resistance here that we saw back in January. The fact that it's broken out there probably puts me off that a little bit. So I'm actually going to take a look at the commodity currency, the other commodity currencies, sterling, New Zealand and sterling Oz. We can see on the daily here, there's been a significant rally in recent weeks towards this major resistance here at 82.75, and prices are stalling. Seeing a similar thing on New Zealand dollar as well, but I think sterling Oz is probably the one I'm going to go for. So let's take a look at the intraday, see what's shaping up here. So we can see prices starting to roll over a bit to the downside. So I want to sell sterling Oz at the current price of 81.55, 81.56, somewhere around there.
No, sterling Oz, got to add it, mate. Got to add it. We haven't done it before.
Oh no.
Right, let's get. There we go. Sterling Oz.
Stop loss 82.03. Steve filling out the ticket here. 82.03. Target 80.27.
Hold on. What have we got from a price perspective? Sorry, yeah. Where's the stop?
It's 82.03. 82.03.
82.03. Target
80.27.
There we go. About 2.38 to 1. Yeah. 2.3 to 1.
Yep.
Okay, you're in, Joe.
Okay, so there's two trades. Let's see how they go between now and 9 o'clock UK time when we close them out.
Lovely.
Okay, data. So not much on the calendar today. We've got this Fed chat, but that's behind closed doors. So we may not see anything from that today. We may do. It may just come out and surprise us. We'll have to wait and see. But tomorrow we've got UK labour market report. So latest read on jobs in the UK. But also tomorrow we have that all-important US CPI number, pretty much being one of the biggest market moving pieces of data over the last few months or so. So that's expected to create a fair amount of volatility. On Wednesday, we've got a UK budget statement, so we will have some visibility about what to expect on that. But it does tend to be an event that moves the dial quite substantially. Certainly did in September when we had that mini budget where it crashed sterling. So let's hope we don't see a repeat of that. And then on Thursday, we've got the ECB policy decision. So that'll be interesting to see what next steps they're taking with regards to raising interest rates. That certainly is expected. But following what we've seen over the weekend and the shift in the Fed funds rate, maybe there'll be a change in policy there ahead of that. But we'll get plenty of preview ahead of time, and obviously lots of time and market action to pass before we get there. Okay, so Steve, I think that's it from us today. Let's get it wrapped up, and we'll be back tomorrow with some more.
Cheers all.
Bye-bye.